Bitcoin halving could be a non-event, according to experts. The crypto industry has been rightfully buzzing over the last month about the forthcoming Bitcoin, BTC, halving event, which is set to take place in a little more than 2 weeks. To begin with, it's unquestionably one of the most, if not the most, anticipated crypto events of 2020. However, because of the COVID-19 pandemic, many analysts are dubious whether the event will have a significant impact on Bitcoin's financial future. It's intriguing to note that, whilst many different traditional assets have had their prices plummet significantly since the beginning of March, Bitcoin has mainly been able to withstand the massive amount of adverse pressure that has come its way and maintain its worth above $7,000 level. In fact, on April 23, the top cryptocurrency had a pre-halving pump, which saw the asset's value surpass $7,500. What are the prospects? While all of the aforementioned factors point to a positive future for Bitcoin as an investment vehicle, it appears as if the level of uncertainty may be much higher than in previous halvings. Cointelegraph contacted Scott Freeman, co-founder of JST Capital, a financial services firm focusing in the digital asset market, to gain a better grasp of the situation. He stated that after speaking with numerous people working throughout the industry, including miners and institutional buyers, the one consistent message he has heard is that the halving will most likely be a non-event in terms of Bitcoin worth movement. The halving has been on everyone's radar for a long time, and as such, the impact on markets should already be incorporated into the value of BTC. The halving may have an impact on some miners' income, but we anticipate that at this point, each miner has already made changes to their business models. In a similar spirit, Melton Demiraz, the chief strategy officer of digital asset administration firm CoinShares, joked with Cointelegraph that, like the rest of the economy, the Bitcoin rally around the halving has been postponed until further notice due to the ongoing coronavirus situation. She did, however, add that her firm has observed a number of significant trends that have pushed up demand for digital property. According to Demiraz, we see demand in the form of increased usefulness for Bitcoin outside monetary theory and an increasing amount of institutional interest, while new derivatives markets are increasingly raising costs. Experts disagree about Bitcoin's future due to market uncertainty. Historically, a Bitcoin halving event is usually accompanied by a lot of market buzz or fanfare, which invariably helps push the currency's value upward. However, things are very different this time around. Cointelegraph contacted Jose Listeri, co-founder of Interdax, a crypto exchange platform, to further assess the flagship cryptocurrency's future. He discovered that the value of the Bitcoin US dollar pair has tended to approach its all-time high 16 months after each of the previous halving occurrences. If this trend continues, a new all-time high may be reached any time around September 2021, he noted. Not only that, but Listeri also stated that after this future occasion, only the most environmentally friendly miners would be allowed to operate, as the halving will virtually double their operational prices in a single day. Furthermore, if inefficient miners close down, a positive problem adjustment for the remaining miners can be seen, implying that revenue margins will undoubtedly improve as well. He continued, saying, "What's different this time is that there's now a steady derivatives market, so the impact of miners accumulating might not be as strong as it was during the bull runs in 2013 and 2017. Futures and perpetual swaps allow purchasers and miners to hedge their holdings or speculate on Bitcoin's long-term worth path, allowing for true worth discovery." In this regard, Ivilo Jordanov of 7% Ventures, a United Kingdom-based venture capital firm, feels that as a result of the ongoing fiscal stimulus, an increasing number of people have been looking for property that is scarce in nature. According to him, the Bitcoin halving will exacerbate the scarcity factor, making crypto more appealing to the general public. Similarly, Trent Barnes of Zero Cap, an Australia-based digital property and foreign exchange options firm, believes that due to the number of variables that are currently in play, it is difficult to provide an accurate forecast of how Bitcoin will perform in this current economic environment, including: "We expect strong short-term volatility following the halving, both on the upside and on the downside. Longer term, we expect value to rise in accordance with a stock-to-flow model. I wouldn't be surprised if it flew under most people's eyes. In the meantime, the astute buyers will continue to accumulate." Finally, Frederick Johansson, the founder of Lobonomy, a blockchain ecosystem governed by artificial intelligence, feels that in the past, halving events were frequently accompanied by a lot of media excitement, exposing people to Bitcoin. However, most buyers and crypto enthusiasts are already well versed in Bitcoin, so irrational monetary growth is unlikely this time. Pundits believe that the information provided by Google Tendencies is worthless. According to Google Trends, searches for the term cryptocurrency have decreased by nearly half since June 2019. However, experts such as Neil Poppet, the CEO and co-founder of Bitcoin funding platform Donut, believe that such data is somewhat limited in its overall reach, as there are a number of distinct indicators that may be used to evaluate shopper interest in cryptocurrency. Within the ecosystem, new development areas like DeFi are generating a lot of interest. Many people get more thrilled when there are events and price spikes, so if one occurs after the halving, that is the perfect storm for public curiosity. Similarly, Emre Tekisalp, the head of enterprise development at O1 Labs, the creators of the Coda protocol, told Cointelegraph that, contrary to what Google Trends might suggest, interest in cryptocurrency as a method of payment and fuel to power the modern-day digital financial system has grown significantly among the general public, as well as among governments and numerous establishments all over the world. The introduction of central bank digital currencies, CBDCs, will eventually raise public awareness of decentralized alternatives such as Bitcoin and Ethereum. Finally, Nick Hill, vice chairman of business development at asset management firm Invictus Capital, feels that because of the massive stimulus packages implemented by governments all over the world, discussions about how money is created in the first place have resurfaced. This, in his opinion, will invariably prompt people to discuss cryptocurrency once more, as well as how this distinct asset class might serve as a bulwark against unrestricted money creation by central banks. Bitcoin investor confidence may increase. With traditional commodities such as oil and shares plummeting in recent months, with the worth of the previous reaching an all-time low on April 20th, it's worth considering whether or not market confidence in connection to Bitcoin and the crypto trade in general will rise in the coming months. Tanner Philp, the head of business development at Kik, a social media messaging platform, told Cointelegraph that it has been extraordinary to see market confidence remain high in relation to Bitcoin despite the entire insane bearish pressure that the global finance sector has seen over the last few months. I believe the capital flight in Bitcoin and crypto, in general, is less associated with the halving and more so a requirement for people to determine money positions in the midst of a pandemic. In my opinion, crypto will continue to be kept as a speculative asset for the foreseeable future, but in order to become a multi-trillion-dollar asset, it must move beyond that for use as a currency. I believe the trade is progressing in that area. In terms of whether or not purchasers have been more knowledgeable about Bitcoin, as well as crypto know-how in general, it's rather evident that since the initial coin offering bubble of 2017, people have become more mature in the way they assess many altcoins and different associated crypto options. Nonetheless, despite the fact that awareness is more than ever before, digital currencies are still a long way from widespread use. Nonetheless, many experts believe that in times of calamity, such as the current one, new businesses and technologies might arise, and so now could be an excellent time for cryptocurrency to demonstrate its benefits and attain universal use. On the subject, Andy G., co-founder of Ontology, a public blockchain and distributed collaboration platform, believes that, while Bitcoin's dizzying price highs in late 2017 and subsequent drop gave people the impression that the asset is subject to uncontrollable volatility, Bitcoin has recently reverted to a more normal pattern of development that has been relatively unaffected by outside market fluctuations. Over the preceding 12 months, there was a heightened awareness among inhabitants of the potential of Bitcoin, its key characteristics, and the Bitcoin-powered routes customers can explore. Every month, new swaths of sophisticated digital funds consumers emerge, bolstered in part by the increased use of crypto and blockchain know-how more broadly amongst businesses with family names.